Thursday, August 10th, market analysis, Stan Ehrlich. Well, we had a very good rally this morning in the stock market indexes, which I always start out with, and the S&P in particular, the spider specifically. And I talk about the E-mini and a few other indexes, and the most important section is the futures markets, 22 different futures. So the rally didn't hold so far. We're looking at a new high for 3 days or so. Not super important, but if it had stayed there or goes back up and closes near the high of the day today, that could be a different situation. That's not happening. We are now a little bit below where we opened and only up 2 points, and we have made new lows for the day after the opening lows earlier. And let's look at the 1-minute chart, and we'll see that we gapped up a bit right here, and then, and I'll blow it up for a full screen for you, gapped up a little bit here, and you're looking at the last 5 days or so of data on a 1-minute basis. So the rally didn't carry that far. And after the opening right here, we tested the opening lows, bounced and couldn't hold it. Now on a rally at the moment, we are also stopping right about the low of the opening, 448. And if it starts to make new lows again, we could end up with what I would think to be the beginning of the end of this downside break, meaning that tomorrow, Friday, and or maybe Monday, we could see another 1 or 2 more sharply lower days to finally close the gap on the S&P 500 spider, and that would be coming down to 443. At that point, we may be getting oversold also, or maybe we're going to drop off a little bit more. 437 is not out of the question. That wouldn't be too much more of a dip. And I can't completely rule out 432-ish, but I do not expect it to get below 432. So there you have a little zone in which I expect the market to turn around and start to make new highs for the whole trend. What about the DIA? Well, it popped up pretty good this morning, actually, even though we've had 2 bearish engulfings lately, and we caught essentially the top of the market on the DIA. So it made new highs for a few past days, but like the S&P, promptly died out and has made new lows for the day and is currently below where it opened. And the early rally is just fizzled at the moment. Again, more weakness is probably going to end up putting the last couple of days with the weakness into this break, which I was totally expecting to call for before it happened, when we challenged resistance areas in overbought conditions. And then, hey, got some bearish engulfing sell signals. So what about the Qs? Oh, by the way, and the DIA has closed its gap where the spider came very, very close, but the DIA's finished the job a couple days ago. And so on the next drive down to new lows for the Qs and spider, maybe the Dow Jones will hold at a little bit better levels, although my best shot here is 345 3/4 for the low of the break coming up in a couple, 3 days, maybe 3. I think it's going to happen relatively quickly. And the Qs, they're already close to making another new low. Yesterday was a new low. The day before that was a new low. And the gap has been closed like the DIA, also in the Qs, and some extra now. And this morning's rally was only able to get above the high of the last 2 days. Clearly, the Qs have been the weakest of the 3 during the last month almost. So unfortunately, no red bearish engulfing sell signals on the Qs, but in resistance and overbought. Talked about it at the time it was happening. So let's see if I can call a turn to the upside, and that would be in the Qs at 358 and a half-ish. That's my best shot on the Qs at this particular point. Timing's the same. Early next week, Monday, Tuesday, well, we'll see what happens. Now, the Russell 2000 is very similar to the Qs, making new lows lately, can't hold very well, and is also kind of getting close to oversold, but none of them are. So one more drive down, and I'll have the combination of things I would love to find a green bullish engulfing all of a sudden, sometime next week. And then we're on our way back up, in my opinion. So let's look at futures. The bond market, I have been able to pick a turn several days ago with the bullish ER buy signal in an area of support on the 4th of August. This is the first day that we may have a lower close since then. And I'm liking what I'm looking at. It's a normal dip at the moment, back down. And the rally high is about where you might expect it, the high end of a little resistance area. But I think we're not going to be sitting at a little bit lower like we are at the moment, or even a little lower than we are right now, but not a lot for long. And I do think that today's high is going to go bye-bye, and maybe within 1, 2, 3 days, we're going to see a new high close, eating our way into the resistance area at 125 and higher. I'd love to see approximately the middle of next week. And the reason I say that is because this 88-day cycle, which has been phenomenal, the last 6 revolutions of 88 days, we also see the highs reasonably well timed. And it's supposed to be August 20th for the next cyclic high. So coming up very soon. We'll see what happens. Now, shortly we're going to see a red bar begin to build. That would be the window of opportunity, the cycle high time frame, which is 10% of the 88 days. So 4.4 days earlier than that date and 4.4 days later would be the window of opportunity. Next, E-mini. 3 bearish engulfing ER sell signals on the top of the rally in the same area of resistance, obviously in overbought conditions, and divergences as well. New highs in price, but not new highs in the indicator. So we're close to making a new low, which we did yesterday and the day before, and looks like almost every day since the signals occurred, except for one. So this could be the second. We made it up to the highs of the last 2-3 days, and right away it failed. So I'd love to see this close lower than yesterday's close. I think the major bull trend line might have something to do with it bottoming out in the next few days. Remember, that's not the same price every day. And we are not far from being oversold. So my best shot here is kind of ambiguous. We already hit the first support area, and it is holding okay. I'm gonna, well, okay, between 4,408 and 4370. Next chart is the US bonds. We saw that on the cycle chart a moment ago, and the 10-year notes a few days ago had a bullish engulfing. Fantastic. We've had a modest rally since then, and today we're dipping down very slightly. I see that there is a bearish engulfing here, but that's not a sell signal for the Ehrlich reversal, because we're nowhere near overbought. And there's a variety of other reasons. So I'm not expecting this to come down much more, maybe a very little bit, and turn up and close above today's highs. Next, we have resistance, apparently stopping the crude oil finally, and overbought conditions this morning for the first time in a while again. I think today could be a high day. We had a sell signal a few days ago, didn't work, but they sometimes are part of topping out and bottoming out formations and timeframes. So I'm still liking my statement. I think we're going to see the market down below 78.40 in just a few days. Next, heating oil. Same kind of comment here. Smack dab against the resistance, which is the previous major high, and a bearish engulfing ER sell signal as well, which produced a fantastic trade. We're prime territory here to have the same thing happen again, but not so far. And I think we're turning. I think today's a high day. And I'm expecting it to drop below 2.9321 very soon. Next, natural gas. Same kind of comments on all the energies, apparently. So overbought conditions, couldn't hold its head above new high ground, which it did get to yesterday, and it did stay there, but right away, kerplunk, serious kerplunk today, big down day, pretty much wipes out everything that happened yesterday. Looking for lower levels right away. Gold. We picked the top of this last rally and had another bearish engulfing just a few days later. And today's a new low since we got short. But we're smack dab at a support area, and it's a not bad, actually. I will draw in for you real quick. Sometimes I do this right in front of you, so going back to right about there, and that looks like it should be about it. I like the fact that you've got a high involved, a major low, and we're oversold right now, trying to have a reversal. If we get above yesterday's high, I'm going to get a green bar, but it hasn't happened yet. But the fact that it's oversold in support leads me to believe that we're going to have a little bounce. I don't think it's going to make it above the highs of these reversals, and I do think it's going to be coming back down below the support area relatively soon. I'm bearish, but I think it could bounce. Next, we have in silver a brand new bullish engulfing buy signal today. So assume that it closes higher on the day than yesterday. We have a turn in a support area. Same kind of comments for silver. We sold the rally high at the very top. In fact, we got the double top as well. We got the low before that. Silver's been having really great signals. Not that past performance is indicative of future results, but I like what I'm looking at. And I wouldn't be surprised to see it up to 24 or a bit higher soon, but I'm basically bearish. Next, platinum, oversold, third day in a row, but now we're jumping back above the close of yesterday and the day before that. Plus, the lows are right in the ballpark of some support. Same kind of commentary. All three precious metals should rally a little. Next, copper. We got the top of the rally a week and a half ago. I'm looking for a little bit lower. Next, soybeans. Well. So, major long-term bullish breakout, maybe, a couple of weeks ago. But we have a bearish engulfing at the top of the rally, almost the exact high day, plus two others, a little early and a little late, if you ask me. But that is not common, and it adds to the potential bearishness on a long-term basis. But in an area of support, in oversold conditions, in the last couple of days, exactly what I've said for a few days now, we could bounce. Now, this rally, and now we have a bullish engulfing today, a brand new buy signal. If this rally can attack 1420-ish, then it's probably going to break into new high ground completely, 1440-ish, and perpetuate a very bullish long-term technical situation. On the other hand, if today's buy signal fails, and they can, and we start closing below 1280, major flip-flop And I would expect it to come all the way back down here to 1090-ish to test the possibility of a bearish breakout on a long-term basis. So this little twitch and buy signal today is pretty important. Is it going to work or not? Next chart. Bean oil, nothing going on momentarily. Kind of neutral, pass on the comments. Next is soybean meal. I got to say the same kind of thing right here. Sell signal a few days ago didn't work quite right. Neutral, I'll wait a little longer for more comments. I do see the possibility of a large top developing, but we need to have some more bearish activity for me to be forecasting moves all the way down to below 300. Next, corn. Okay, it bounced off support like some of the other charts we've seen. It didn't quite get oversold, but super close. So far this bounce is very feeble, not going anywhere, and it could drop again sharply below support. And if that happens on a closing basis, let's say 471 or lower, it could break down super fast, super big. For the moment, there seems to be a pretty good chance of a modest rally, but then the big downside breakout is going to happen later. Next chart, wheat. Same kind of commentary for wheat, definitely. Resistance has stopped the rallies. Support is barely hanging on these last few days, but there could be another rally. The big deal here is it going to break out to the downside or not? Next, cattle. We sold the top ER red sell signal, perfect. We got a major rally high before that, great. There was a green buy signal almost at the bottom of a big decline, and that's been the lowest low since. I think we're looking at this cattle going still higher, major trend lines, and I should have drawn the bull trend line underneath these lows, but yeah, you can visualize it. It's still there, and the trend is up. Trend is your friend. We picked a great turning point, had a nice profit. Now the question mark is that still going to end up being a major high and turn down right away. I don't see it yet. We should have kept going down yesterday and today, and that's not happening. We almost have a new high close, and we almost have a new high since the bearish engulfing at the top. That's a little stronger than I'd like to see at the moment. So you're kind of in the no man's land. Next is hogs. Obviously long-term bearish. We picked the top of the hog market way back when, and another high important one, and another one. I don't see any great bottoms, so small one there, but the sell signals have been very good on the average. Didn't get one lately. New lows for a couple of months, month and a half, but it's not staying down there. That's not particularly bearish price action. When you pump into new low ground for 2 months almost, typically you want to stay down there, close down there, and drop a bit more within the next hours or a day or two or whatever, very soon. That's not happening. This looks like it's trying to turn around and support held fairly well, past tense. We could pop right back up to 86 here pretty easily. So, little sideways trading range. I'm waiting for more significant breakout one way or the other. Next, we got the top of the market in OJ. I think we're going to see at least a test of 289, very likely 276, and below that is quite possible. I'm not sure how it's going to handle a bull trend line in a week or two. When it comes down that low, we'll see. I'm a little bearish. Long term, maybe we just saw the top of the market with an ER sell signal for a long, long time. Remember, RSI got way up to 92. That's very rare. Next, gigantic bearish engulfing a few days ago in cocoa. Fantastic. And I mentioned at the time, it's almost impossible, but it does happen occasionally. You're overbought one day and the market breaks down so badly, so quickly that the next day you're in oversold condition on a daily data chart. That doesn't happen very often. So I'm not surprised that we're all of a sudden coming down a little slower. We could break down one more time real fast and quick, but I'm thinking we probably went down too much, too quick, too fast. And in oversold conditions for the last 2 days plus now, we may have a little bit of a bounce and then turn down again. Next is cotton. We picked the top of the market in cotton, right in a resistance area, working out just fine, not super profitable, but this rally puts things into jeopardy a little bit. We have a new high and or a new high close. It looks like, yes, for about a week or so. Needs to turn down right away in order to stay bearish. Otherwise, I'm on the verge of going neutral to friendly because that puts the resistance area and the high of the bearish engulfing in jeopardy, which would be 880 or 8840-ish. Next, sugar. Still bearish down to about 20. 1 or 2 day rally here doesn't change much. Looking for lower levels and hopefully a sell signal or something to grab onto momentarily. Maybe get a little tiny bit more rally up to 24, 60, 70, and then down. Next, coffee. Looking for lower levels. Trend is lower. I see this as a possible head and shoulder top. I see it, but they're not usually during a bear trend. Sometimes they are. And that certainly looks like I should have drawn a neckline in right there and saw that. It's working. There's nothing wrong with the way it's acting. The downside objective would be in the ballpark of 140 or a little lower. Next, E-mini again. Well, we're staying soft. We're only now less than a point higher on the day. Let's go back real quick. We just made new lows for the S&P Spider for the day. At this rate, well, we could see new lows completely, and then I'll have something to say about a bearish engulfing in oversold condition, but I don't have it yet. We do have one on the Russell. The Russell is almost oversold, and it has a bearish engulfing. So if we nosedive a bit more before the end of the day, I've got some bullish commentary for tomorrow morning about that kind of situation. You have a great day. See you tomorrow, Friday.